So, my name is Scott Picken, and I am coming live from Atlanta, believe it or not. Yes, I am sitting in an Airbnb in Atlanta, and if you have or haven't seen, there is a hurricane about to hit Atlanta, and it's not me. So, it's actually just started raining pretty intensely outside, so this is going to be an interesting couple of days. So, I'm on the ground here, I'm meeting partners, looking at property opportunities. One of the things that we believe a lot in when one is investing and diversifying is that you need to get on the ground, you need to meet partners, you need to come and kick the tires and the tackies and meet the partners, but also see the buildings and see what's going on the ground. So I've been here now for 10 days. It's been a tough week, but a very, very successful week in terms of progress. So where are you coming from in the world? I'm sitting in Atlanta, Georgia. Whereabouts are you? So we got Mpho sitting in South Africa. Awesome, Mpho, lovely to have you here. Where else is everyone else coming from? So we got Gary from Johannesburg, South Africa. Sure, Joburg, Midrand. Wow, we've got lots of South Africans today. Brilliant. Oh, well, you've got a South African presenting to you from America. So I can see lots of South Africans here. Soweto, Ballito, Thunderbell Park, Pretoria, another one in America, Tallahassee, Lesotho. Okay, brilliant. Neisner. So awesome. Yeah, Alex is at my house. I'd much rather be there than sitting in a hurricane in Atlanta. Anyway, some call me the hurricane, so maybe I'm the hurricane arriving in Atlanta. The bottom line is I came here to get results, and for me, everything that I'm about to share with you in the next 90 minutes is all about results. So some people see hurricane as something negative, others see it as a force of nature and something that gets things done. Now, I don't have a fancy backdrop here because I'm in this Airbnb, but I actually love the poster that's behind me, Live in the Moment. And what I'm going to share with you is what I've learned over I've been doing this 28 years. I've been helping people for over 20 years. And I've helped some of the wealthiest people from 178 countries. And there are patterns and lessons that they do in uncertain times. So would you agree with me? Just type in the chat box yes or no, or maybe if you're not sure, as to whether we live in uncertain times. Do you think we live in uncertain times? Yes or no? So Linda says yes. Sure, they're coming in quickly. Lind, Tian, Yalandi, King Musa, Duzani, Lulu, Madria. Not sure if I'm pronouncing that right. Dian. Okay, so a lot of people would agree. So we've created this masterclass to literally solve that problem. What are 5 important lessons from the wealthiest sophisticated investors, and how do they actually deal with uncertainty in terms of it? So if you're ready to get going, and with the force of a hurricane, are you ready for me to get started? Are you ready to strap yourselves in? I've got lots of information to share. Some of you might have seen the introduction just because it gives some clarity as to who we are and what we do and why we do it. So the question I have for you, and most of you, if you've seen me talk before, you know that I always enjoy starting with a question. And the reason being is it gets you in the room. So what would it mean to you and your family to be earning at least $5,000 passive income without any hassle or complexity? So what would that mean to you? And my second question is, how would you like a system which can statistically help you get there 5 times, so 500%, 5 times faster, simpler, and safer? Now, you don't have to answer in the chat box if you don't want to. You're very happy to put it in if you want to. If you want to, answer it yourself, write it on a piece of paper. For those of you that are immediately sitting there thinking this is a get-rich-quick scheme, it's not at all. I have no desire, no interest, and I literally have no idea how to help you do a get-rich-quick scheme. But what I do believe is you can do something 5 times faster, and I'm going to statistically prove it to you based on research that's done by Harvard. Is that fair? I just want to know if that's fair or not. Because sometimes people see 5 times faster, simpler, and safer, and they think, oh, this is a get-rich-quick scheme. If you want a get-rich-quick scheme, this is you're not in the right place. This is not that. It's a sustainable, systematic way of doing it. It's what the top 1% do. And our philosophy is to empower everybody to be like the top 1%. So I like to use stories of real people, real stories. And Jordan is a high net worth, worked very hard in his life, wants to build a portfolio to ensure his wealth is preserved. When he came to us, he wanted a number of things, basically, in terms of where he was at. He wanted to build a globally diversified passive income of at least $5,000 a month, then $10,000 a month, then $25,000 a month, simply and safely. He wanted to diversify his investments between countries, currencies, and assets. He wanted to use his limited time to get effective results with predictability. He wanted to save decades of frustration and millions of dollars to get the right knowledge for him and his family. He wanted wealth protection, a plan B, and peace of mind. He wanted to be held accountable with an accountability partner to get results. He wanted to have a family office to help him manage all his affairs. He wanted to create generational wealth for his family. He wanted to have a fully completed execution wealth plan and investor strategy sheet. And finally, he wanted to get results. So who here, when you look at this, and some of you might have even seen this before, but who here resonates with Jordan and the things that Jordan wanted, the needs that Jordan has? Do you have the same needs as Jordan? While you sit here now, reflect on it. When you look at these needs, are these needs the same for you as what Jordan had? Because if they are, then you're in the right place. Because we have built solutions to help people like Jordan. And if these needs resonate with you, then you're in the right place for yourself. What about Victoria, an entrepreneur in her 50s, devoted to family and business and aiming to build generational wealth? She had a packed schedule, and so she wanted a streamlined investment strategy that empowered her to make wise decisions and aligns with her goals so that she could have more time with her grandchildren and her daughters. She wanted to understand the investment landscape. She was tired of being told by financial advisors who she didn't trust what to do. She wanted to feel empowered so that she could make the right decisions for herself and her family. And she wanted to achieve financial freedom so that she could spend more quality time with her loved ones. So again, when you look at these needs, who resonates here with Victoria? Or maybe it's both. Maybe you resonate with Jordan and with Victoria. Now you'll notice that I'm doing this very consciously because there's actually a science out there. And I'm one of those boring propeller heads who likes to work on science, fact, fundamentals, and systems. And one of them is from Simon Sinek, that when you get very clear on your why, you have a far better chance of achieving your how and your what. Let me repeat what I just said. When you get very clear on your how, you have on your why, you get far better chance of achieving your how and your what. So we're going to talk today about diversification. And I'm going to teach you how to do it and what to do. But if you don't get clear on your why, from my experience and from research, you're not going to achieve it. And so that's why I start with Jordan and Victoria. And I say, is this what you want? Do you have the same needs? Because if you do, then you have the same why, the same drive. And if you do, then you're in the right place in terms of this promotion. So how do we actually do this? Well, we believe in living a life unlimited. And how do you actually do that? You do it through diversification. So it's about using technology, and it's about diversification 5.0. And I'm going to explain to you today what diversification 5.0 is all about. Now, for those of you that are not sure, I'm a big believer that everyone should have investment goals. When Alex and I sit down with someone, we say, what's your investment strategy? I mean, just type in the chat box. Do you even have an investment strategy? Okay. And I don't care how sophisticated you are. You can be a high net worth individual. You can be a sophisticated individual. And the question is, do you have a globally diversified investment strategy? Do you have a way to create globally diversified passive income? Do you have an investment strategy? And so what we've done is we've built a next steps navigator. And what this basically does is it helps you put down your investment goals. And it also, if you want to sit down and have an investor strategy discovery session with one of our team, we can actually help you start to look at your investment strategy. What are you wanting to achieve? Now, by the way, almost everyone we deal with already has a financial advisor and they've got a so-called financial plan. And again, today I don't have time, but that advisor is only sharing with you one step in a 9-step process. If you map and model the wealthiest people in the world, there are 9 steps to creating generational wealth. Now, we don't want people just to create wealth. We actually want you to create generational wealth, something where you can leave a legacy for your children and ideally even for their children. Now, there are 9 steps. 9. Let me put up my fingers so you can see how many 9 is. 9 steps. And your financial advisor is giving you 1 step. So if you say to me, no, but don't worry, I've got a financial advisor, I've got an investment strategy. Okay. But chances are, based on the fact we've looked at people in 178 countries, the chances are you have 1 of the 9 steps. And if you literally use the next steps navigator, crosses, guys, we've got to come up with an easier name for me to say. We can actually help you define what your investment goals are, what your investment strategy is, and come up with the other 9. Well, if you're doing 1 of them, then there's 8 more. But, my strong recommendation is that if you want to be successful in life, do what successful people are doing. And if the top 1% in the world, around the world, the top wealthiest 1% in the world are doing 9 steps and you're only doing 1 step, then I would highly recommend that you find out what those other 8 steps are. Is that fair? But just type in the chat box there if you wouldn't mind, if you agree with me, if this makes sense. Because I'm very, very passionate about helping people achieve their goals. And with my team, Alex and Shane and the rest of the team, they've literally built the tools to help you. So, literally the Next X Navigator can help you and get you started in terms of this investment strategy discovery session. So, literally, there's the link. I know that Shane's already put it in to the chat box, but there it is. If you're watching the recording or whatever, you can literally go along and put it in. And as Tian said, having a proper plan makes sense. And you'll be surprised. We've got 74 members that are part of our mastermind, an incredible group of people from America, from England, from Australia, from Spain, Italy, Portugal, Germany, South Africa, Zimbabwe, Zambia, Swaziland, a mixture of men and women ranging from about 40 through to 72. Incredible group of people, everywhere from farmers to teachers to highly sophisticated, accountants to business people. We've even got the Auditor General, the guy that audits the Auditor General of South Africa. And what's really interesting to me, through all of them, through 74 different people, without fail, the reason that they've got so much value is having a holistic investor strategy, a plan, basically, having the plan in place. So, I strongly recommend that you have that plan in place. So I want to start with a story. And it's a story of 2 brothers. There was one brother that lived in Zimbabwe. It was 1976. There were challenges in the country, and they were farmers, and there'd been some terrorist attacks on their farms, and they decided it was time to leave Zimbabwe and go to South Africa. They basically got kicked off their farms. And they got in a car very similar to this one, a little Renault. They packed all of everything that they could have, that they could fit in the car. Their whole lives was whatever they could fit in the car is what went with them. And they drove down to Durban, South Africa. And they arrived in Durban, South Africa. And, at the end of the day, all that they had in the world was what they could fit in the car. And this brother tended to live quite a reactive life. So, he reacted when there was a problem with the economy or politically. He got a job in South Africa. He worked for someone else. It's quite difficult for a farmer to become a farmer in another country. And, he kind of was always reactive in life as to what was happening in the economy, what was happening in the currency, what was happening politically. There was another brother, and in 1980, he also lived in Zimbabwe, but he decided that he should invest overseas. So in 1980, he started investing overseas and diversifying. And in 2003, so 23 years later, he decided that it was time to leave Zimbabwe, and he moved to Australia. And at the age of 53, he bought his way into Australia. So anyone that turns around and says you can't buy your way into countries, you can. He bought his way into Australia. He bought a house for cash in Brisbane. He put his kid through one of the best private schools in Brisbane, and the kid went on to row at some of the best universities in the world. And the best part is he probably didn't have to work for an Australian. I think it's pretty hard when you've worked your whole life to suddenly have to go and, work in another country and to drop a number of pay grades down. And the question I have for you is, which brother would you want to be? The one brother was very reactive and kind of made decisions based on what happened in the economy or what happened politically today. And the other brother was very proactive, and he made decisions that 20 plus years later enabled him to have the freedom of choice as to where he lived, where he sent his kid to school, who he worked for, et cetera, et cetera. Again, do you want to be the reactive brother or do you want to be the proactive brother? And it's a really fascinating story because most of us hear it and most of us are saying, no, they want to be the proactive brother. And then I say to you, well, what are you doing proactive about your wealth? What are you actually doing about diversification and making sure that you're setting yourself up for success? So the first brother was my father. And, he arrived in South Africa and he was qualified as a farmer. So he went back to university and he became a chartered accountant. And he actually worked for Rainbow Chickens, which is a listed company in South Africa. He became financial director of Rainbow Chickens. And my father did what we were all taught to do. He went to school, he went to university, he worked hard, he got a great job, he invested, he trusted the financial industry. And yet when my dad died, he died broke at the age of 59. And I decided that this is ridiculous. I'm not following that path. What's the point of doing what your parents do and getting the same results as them? It doesn't make any sense to me. And so I went out and I started researching. And that's when I came across Dr. Hannes Dreyer, and he said, if you look at the Western world, so that's England, Australia, and America, 94% of people will be the same as my father at the age of 65. They'll either be dead, broke, or reliant on the government. 5% of people will be financially independent. And people always get super excited, like, I want to be financially independent, until they find out that they're going to earn 25% less than their last paycheck. Now, that's not great. That's actually 25% poorer, and basically means you're financially trapped, which means that only 1% of people are retiring wealthy. Now, we're all out there wanting to retire comfortably, etc., and 1 in 100 people is finishing the race. 1 in 100 people. And I just thought to myself at a very young age, this is ridiculous. Like, if I keep doing what the 99% are doing, if I invest like the 99%, then I'm going to continue getting the results of the 99%. Now, if you're honest with yourself, you don't need to put it in the chat box. But who here is following the path of my dad? Working hard, getting a great degree, getting a great job, trusting the financial industry, wanting to retire at least comfortably. And yet statistically, 99% of you are going to fail. Pretty insane, isn't it? Bit of a reality check, actually. And that's where, I always go and I say, and I learned this 20, well, I don't even know how long ago, but certainly 20 years plus ago, that the only way to succeed was to find what the top 1% do and to do the same thing. Is that a fair kind of statement? So this book here, Rich Dad, Poor Dad, and Cash Flow Quadrant, if you haven't read it, I'd highly recommend it. And, it talks about the E, the S, the B, and the I, the cash flow quadrant. If you go into it in more detail, the employee has hard work, no security, no time. The self-employed has large debts, insufficient funds, stress. And it's all about active income. 95% of people in the world make money by being active, and they have 5% of the world's wealth. On the right-hand side, it's about passive income. So you've got the business owner, which is kind of easy work, stability, spare time, and the investor, which is no debts, plenty of money, and freedom. And this is kind of 5% of the world's population and 95% of the world's wealth. Now, I'm sure most of you have seen this before, but the question is whether you are a beginner or whether you're highly sophisticated in one country. The question is how to be a global investor. How do you become a global citizen? How do you earn globally diversified passive income so that you don't just have passive income from one country and have all your eggs in one basket, but actually have globally diversified passive income from multiple countries so that you can be a global citizen like my uncle? You can be like my uncle and you can choose what country you want to live in. You can choose what school your kid goes to school. You can choose where you want to live. You can choose who you work for. That for me is a global citizen. And so I'd like to see here, just type in the chat box if this is making sense for you and if you'd like to be a global citizen. No one? Okay, just me then. Just by the way, I told you already, I'm on the ground here in America. And if you haven't watched the video that I made last week on Friday or Saturday about being a global citizen, one of the greatest things that I would recommend is when you get on the ground, come and see other countries, come and meet people on the ground, no matter where you live. I'm very proudly South African. I love living in South Africa. But you've got to get out there. You've got to be on the ground. You've got to see what's going on around the world. That's what a global citizen is. And I congratulate you just for being on this webinar, even because you can learn from people like me that are on the ground, learning, seeing what's going on in America, what's happening with inflation and interest rates and the impending election, and what does that mean to investment, et cetera, et cetera, et cetera. So, where did this all start? Well, I did my first property project when I was 13 years old, and and then I did my first property development when I was 22 years old. I did my first London property when I was 24 years old. And I then started a company called International Property Solutions, where we help thousands of people buy houses in South Africa, hundreds in London, hundreds in Australia, and hundreds in America. And what I realized, having helped 2,500 people, was that there were massive barriers to entry. Most people were stuck in country. They couldn't invest internationally. There were very high barriers and hassle if they wanted to get into commercial property or international property. And then, if they wanted to go internationally, the complexity was just, huge with banking and trusts and structures and everything in between. And I just realized that 99% of people cannot invest like the top 1%. I had two horrible stories. One was a building in 2009 in Wimbledon. This building here was 48 units. It was already existing. We could literally buy it. It was at a 40% discount. It was cash flow positive by £440 a month. It was tenanted, furnished, the whole bank shoot. And I literally said, I went to 2,500 investors and said, I don't care what happens in the market. This represents a real opportunity. We needed £10 million to get everyone to work together. And I just couldn't do it. And we lost out. And I mean, we could have bought those units at £160,000. Today, they're worth £1 million. And we would have had the capital growth and the income the entire way through the process. Then in 2000, late 2009, early 2010, I was in Australia, Bondi Beach, and I met two very wealthy people, and they were buying medical centers. And I said, wow, medical centers, why medical? And they said, well, think about it. No matter what happens in the world economy, people need doctors. I was like, cool, that makes sense. Secondly, doctors, never leave their premises. I was like, it also makes sense. And thirdly, doctors are very good at being doctors, but they're not great accountants. So they sign good long-term leases. I was like, wow, that's like a no-brainer. How do I participate? And they said, well, it's $5 million to participate. So again, I ran around to my 2,500 investors, tried to get them to participate, and we couldn't. And we missed out on this opportunity as well. And today it's worth $700 million. But that all created enough pain for us to create Wealth Migrate. And so 10 years ago, we launched Wealth Migrate. It's been going 10 years this year. Funny enough, in October, believe it or not. And we bought a portfolio of buildings here in Atlanta, so the very city I'm in right now. It was 6 different buildings. It was a $16 million portfolio. We built it. We bought it with partners on the ground. There were 82 investors from 5 different continents. And that's when my mindset shifted completely, because I realized I didn't have to go out there and buy houses and apartments anymore. I could partner with people and actually invest in quality commercial opportunities, which is where the top 1% invest. Since then, over the last 10 years, we help people in 178 countries. We facilitated $1.3 billion in investments. We paid out $31 million in dividends and exits, and we've won numerous awards in terms of the process. So whether people want to invest in America, England, Europe, Australia, or even South Africa, you no longer have to choose because you can diversify. And so the question is, why do people diversify? And the first one is that they want preservation of wealth. They want wealth protection. If you've worked hard for your money, the first thing you want to do is make sure you look after it. Yes or no? I mean, just tell me, everyone's always out there saying, I want to create money, I want to create money. Well, most people actually want to look after the money they've got. Warren Buffett says the number one rule to making money is protect your money. And the number 2 rule is to refer to rule number 1, as in look after your money. The second reason is they want a plan B. So just like my uncle, they don't want to be caught in a country, stuck with all their eggs in one basket, in one country with one asset, one partner, one currency. The third reason they want it Because they want the peace of mind. They want to know that no matter what happens in the global economy, no matter what happens with different asset classes or different economies or different currencies, they want to know that they've got a resilient and robust financial plan. I mean, if you would like a resilient and robust financial plan, I mean, like, yes or no, would you like, no matter how sophisticated you are, no matter how high net worth you are, would you like a resilient and robust financial plan, and one that takes into account diversification and globally diversified passive income? And it's not too good to be true. I mean, we've literally helped 74 people do this in the last 2 years. And if we can do it for them, we can do it for you. But probably the reason that I believe people diversify the most is freedom. It's about freedom of choice. It's about freedom of choosing where you want to live, where you send your children to school, who you work for, exactly the same as my uncle. So, in my opinion, maybe it's just me, but the one that's most important to people is to have that freedom of choice. We don't care where you want to live. We don't care where you want to invest. We don't care who you want to donate your money to. But what we do care about is you having the freedom of choice to be able to make those choices. You know, we live in crazy times, whether it's the war in Russia, inflation, interest rates, fuel prices going up, the stock market all over the place, load shedding, the Israeli conflict, Trump's attempted multiple assassinations, the Labour Party winning, a landslide in England, the GNU in South Africa, Biden quitting, etc., etc., etc. It really is a fascinating world that we should live in. And there's only one way to deal with all of this uncertainty, and that is diversification. And I'm literally going to share with you the principles that I've learned through this process. This is the formula. Take a screenshot of it. So what the wealthiest people in the world do, and there's a tremendous amount of research out there, and when we do the challenge and the workshop, I'll take you all through this. But it's about building globally diversified passive income. And again, if I was in a room, I'd be like, right, who here wants globally diversified passive income? Because that ultimately is what drives your freedom. But to achieve that, you need to diversify across countries, currencies, assets, partners, and time. That's the formula. Literally. Screenshot it if you want. Copy it, take a photo. I don't care. That is the formula. If you want to know how to diversify, you have to diversify across countries, currencies, assets, partners, and time. And why, passive income sits in the middle, because it's all about global diversification. And as Tian says, diversification equals de-risking completely. So I just want to share with you, I've been doing this for 20 years. I've been standing on stage since 2004. And there's a lot of pain in not taking action. Alex and I have this all the time where people come to us and go, oh, Scott, I heard you talk. I wish I'd taken action. And there's so many pictures from around the world of live events that I was hosting where people weren't taking action. And, whether it's hosting, or where we took high net worths away on a farm in terms of the process. And even the events that I've done with Dr. Dolph DeRoos or Neil Peterson or Clem Santa, webinars where people have got the information, but they haven't actually taken action. You know what's interesting? If you look at Harvard, statistically, after 3 months, for those of you who are here now, statistically, after 3 months, you're gonna forget 90%. You're only going to remember 10% of what I'm sharing with you today. 10% if you're told. But if you actually experience, so like when you're part of the mastermind or something like that, and you're actually working on this, every month, then you're going to retain 95% of it. And rather than being told and having to rely on others, you actually empower yourself and you get to make your own decisions, and and you feel confident to be able to make those decisions. So again, according to Harvard, in 3 months, do you want to only remember 10% of what we're sharing, or do you want 95%? Are you starting to see that I don't have opinions? Stuff is backed up by fundamentals and research. And so you can just sit here in a passive way, and then you're going to be like everyone else that's watched me for 20 years. And the chances are that, 5, 10, 20 years from now, nothing for you would have changed. Or you can make a decision and you can get involved, and then you're going to empower yourself and you're going to be sitting at 95% within 3 months. Don't you think that's pretty important? I can also show you, for those of you that kind of want to talk return on investment, if you're taking $12,000 and you take it over a 10-year period, this is a real life story. This was actually a gentleman who had his money in Alan Gray and he was getting about 7%. And I said, well, on average, we've got a return of about 14% over the last 10 years. And our family office partners have also got about 14%. But I said, if you just want to do an average of like 15% over 10 years, do you realize that the future value of that in today's money would be $57,000? How important is it for you? If you've got $12,000, call it 200,000 Rand to invest, and the difference between investing at 7% and investing at 15% in today's money is worth nearly $60,000. That's taking account inflation and everything in between, which is R1,000,000. Have I got your attention now? At 95%, people are like, oh, Harvard, that sounds nice. What about if I said to you, if you don't pay attention and if you don't get the right information and you don't get the right partners, it's worth R1,000,000 to you over the next 10 years? Is that starting to get your attention? So I'll share with you later about the mastermind. So what we found is that there's three types of people in the world. There's the person that wants to do it all on their own. By the way, this was me for 16 years. My logic was go out and read all the books, go on all the courses, buy lots of houses, do it all myself, do it on my own. There's those that want to do it in a group, and there are those that want it done for them. And so if you want to do it in a group or if you want it done for you, then I strongly recommend that you consider the mastermind. And the mastermind is where you get to work with me, you get to work with my partner Alex, you get to work with our family office, and we actually do it together in a small group. I told you already, we've got an amazing group of people, 74 people from around the world. And we've also got a family office partner that comes in and does it for you. And that's quite significant, in terms of that process. So if the mastermind is something that you want or would like to be a part of, you can't buy your way into the mastermind. It's by application only. But if you are interested, just type in their mastermind, and we'll share with you later how you can actually apply to be part of the mastermind. It's very, very important for us to make sure that we only get the right type of people in the mastermind, because it's the caliber of people that are all pulling in the same direction, which actually helps you statistically get results 5 times. I told you today that I'll prove it to you, how you can get there 5 times quicker, simpler, and safer. Well, statistically, if you're in a group of like-minded people that are all pulling in the same direction towards a common goal, so in our case, it's globally diversified passive income and portfolio growth. And if people are interested in that, if that's what you want, if you want to be part of a group of like-minded people that are all becoming global citizens with the intention of globally diversified passive income and portfolio growth, then that is what we built the mastermind for. So these are the 5 important lessons, and I'm going to go through them quickly for you in terms of diversification and what you do in uncertain times. So again, you can literally copy them if you want to. I'm going to share them with you. So I literally have helped people do this for over 2 decades. And as Tony Robbins always says, I might not be that smart at multiple things, but the one thing I am very good at is pattern recognition. And, I'd have to be a bit of an idiot not to spot the patterns of what the wealthiest people do in uncertain times. And these are them. These are the 5 things. They follow the trends, they manage risk, they diversify, they make sure they got the right structures, and they have the right team. That's it. That's the golden formula. You can all go home now. Just in terms of what to do. So sorry, I'm in Atlanta. I'm having a bit of fun. And to all of you who've put in mastermind, perfect. The team will see. So I got a question for you. So I had the privilege last week of jumping on stage, and it was my first live event in 5 years. So I'm used to doing these webinars. I've been doing them since 2008. I used to do live events all over the world. I've literally done live events in I actually have no idea how many cities, but at least 20 plus cities around the world. And the feedback I'm getting from a lot of people is they're a bit zoomed out and they'd like to do live events again. So I got a number of different courses and workshops, one of them being our 5-day challenge. And Shane, if you wouldn't mind just putting up the poll, I'd like to know who would like to come to a 2-day workshop. So I'll take everything that we run through in Wealth Going Global, which is, how to choose the top 5 countries, how to choose the top 5 currencies, how to find the top 15 assets, the top 15 assets you should be investing in, how to find the right partners around the world and avoid the mistakes that 80% of other people make. And finally, how do you build a wealth plan? And what my intention would be, and Shane, my partner, is amazing at this, is it's not a bunch of theory. Like, you actually walk away with a plan, so that you literally walk away with a plan. So in 2 days, you'll get the right information, you'll get access to the right partners, and you'll walk away with a plan as to how you can execute over the next 5, 10, 20 years to be able to get your, globally diversified passive income. So I'm interested whether people would actually want to come to an event like this. We literally are looking to put one on in Johannesburg on the 18th and 19th of October. So it's a Friday, Saturday. Our logic is that it's 1 day of leave and 1 day of your weekend. We're probably going to charge 997 Rand. We make no money from that. That's just to pay for the venue and the costs and et cetera, et cetera. So I can see here that there's a number of people that would be interested. And then which city? I'm also just interested in where people want to do it. I'd love you to just type in the chat box where you would like it. And I can see there's a couple of people in terms of it. That's interesting, Natasha, that it overlaps with Paul Mahoney. That's not good because I want to go to Paul Mahoney. Okay, well, I might have to look at those dates. Thanks for letting me know that, Natasha. I appreciate that. But yeah, just put it in just fill in the poll quickly for me if you're interested, not interested. The people are saying Pretoria, chuck it in it's there. Joburg and Pretoria is the first one. So if you just go and fill it in. Yeah, and I mean, it's interesting because Alex, my partner, was like, Scott, you need to go back into doing live events in live rooms. I was like, oh, are you serious? I've got to get on an airplane and fly and stay in hotels. But actually, it'll be so nice to be sitting, with people and for 2 days, like share all the knowledge, have a bit of fun in the evening. So yeah. Okay, cool. I think that's everyone. Well, 58% of people have participated. To those of you sleeping, this is your chance if you're interested. If you do fill in the poll, we'll make sure that you get first access. I see that 43 people have filled in the poll here. So I'll probably look to get about 30 or 40 people in a room just to keep the numbers tight so that we have a really good quality event in terms of who's in the room and how we actually do it. Okay, perfect. So I'll end that poll. Right, let's go into the 5 different things. So the first one is trends. So James Painter, and I've got my book here. Sorry, I didn't bring these books with me. They're in my suitcase. So this is the book, Property Going Global, that I wrote, and James Painter actually wrote chapter 2 of this book. And he's one of the most interesting people in the world around mainly currency and where it's going and what happened, in terms of the process and how it all works. And what was really interesting to me was that, when he looked at the stock market, and he was doing this for our mastermind members and our wealth hackers, and he showed them that the stock market has quite a strong, high, chance of actually really reclining over the next couple of years. You can see down the bottom here, kind of 2018 through to kind of 2040, 2050, in terms of trajectory. As an investor, you should really be looking at these type of trends and trying to understand what this means in terms of that process. Just by the way, if you want a copy of my book, Property Going Global, just type in their book or property, PGG, Property Going Global, and we'll make sure that we find a way to give you a e-copy of my book, Property Going Global. Is that cool? Okay. But the trends that I think are probably the most important is Ray Dalio. So this is a guy that I highly, highly recommend that you follow. And he's probably the guy that I respect the most in the world when it comes to financial commentary. And you can see at the bottom here, you got time, and on the left-hand side, you got growth. And there's multiple trends that you need to take into account. So the one that's in the middle is productivity. And so every economy should be growing and increasing their productivity. Then you've got the short-term debt cycle, which lasts sort of 5 to 8 years. You've got the long-term debt cycle, which is 75 to 100 years. And then you've also got the political and economic instability, which is going up, all the time. Like you've got social trends and all that. And what's fascinating, if you look at Ray Dalio and all the research that he's done, in this decade, so from 2020 to 2030, we have all the trends intersecting. We've got the short-term debt cycle intersecting with the long-term debt cycle. We've got social, political, and economic changes all intersecting all at the same time. And we live in a crazy time where all of these trends are intersecting. And whenever there's a lot of trends intersecting, it leads to a tremendous amount of change and uncertainty. Now, you've got two choices here. You can go and read Ray's book called Principles. It's about 20 hours worth of listening, and it's as big as the Bible if you want to read it. You can go read all his articles on LinkedIn. A lot of his stuff is on LinkedIn. Or you can literally watch a webinar that I did by Ray Dalio. So we call it a wealth hack, where I literally in 90 minutes went through all of Ray Dalio's research. It's about a year old, but it doesn't matter because it's all about long-term trends. And I took all the information, and in 90 minutes, I said, right, this is everything you need to know about Ray Dalio. So if you're interested in that, just type in there Ray, and we'll find a way to give you a link to the Ray Dalio presentation as well. Because it's really important if you're wanting to know about these long-term trends in terms of what's happening. So, when you look at the crash of 2008, 2009, there was a lot of chaos and uncertainty that was out there. And people were like, what do I do about it? And banks were falling over, and people were really, really concerned. And if you took the property market in London, the property market lost 20% over a period of about 12 months. So everyone was like, oh, property in England's terrible and I should sell and it's a nightmare and whatever. But what wealthy people do is they don't focus just on the short-term trend. They focus on the long-term trends. What is actually happening? What's happening with the fundamentals? What's happening with supply and demand? And what's really important is that, and you might or might not have heard this, but your trend is your friend. And if you understand the long-term trends and you understand the fundamentals, even if there's a short-term correction, long-term, it's going to work in your favor. So I'll give you a real-life story. This is a building that we bought into in 2009. So I just told you that the market had crashed, and we actually managed to get a 26% discount from the developer. So we bought this, we secured it in September of 2008, and it was in Greenwich. So Greenwich is one stop from the financial capital of London, Canary Wharf. And this particular gentleman, Don, bought 4 units for $313,000 each at a 26% discount. He got a positive rental, so the building finally finished in 2011. He got a positive rental for 10 years, and then he sold the property for £1 million each. So he bought them for £313,000, and he sold them for more than £1 million. Now, I know some of you will be sitting here and going, up, it sounds too good to be true. And I'm like, well, are you sure about that? Because let's look at the trends. So what was happening in this area, Night Dragon, so this article came out in June a year or two ago. Night Dragon's investing £8.4 billion, $10.3 billion in the Greenwich Peninsula. The project promises to redevelop the former industrial area. They're building 17,500 homes, 84,000 square meters of commercial and retail, 20,000 square meters of cultural attractions. The company's previous projects, including luxury hotels, et cetera, et cetera, et cetera. Now, can you agree that with this level of infrastructure that was coming in, that the market is going to increase? Plus, a tube station was put in there, one stop from Canary Wharf. Can you see why the demand went up? And we knew this was all happening in terms of the long-term trends. And that's why we invested in there in 2008, 2009. and why the growth was so great. I'll give you another example. Ryan Boyter came to me in 2009 as well. He was a South African and he wanted to move to Australia and he wanted to invest in Australia. So rather than going and buying him a house in a place he wanted to live, we went and bought in Brisbane and Melbourne, and we bought 4-bedroom, 2-bathroom mom and pop homes because that's what the average Australian wants: 4-bedroom, 2-bathroom mom and pop homes. And we bought them between Melbourne and Brisbane. Now, what was interesting is that the property market in Australia in 2009, 2010, 2011 was the best performing property market in the G20, which is the top 20 economies in the world. And Brisbane and Melbourne were the two top markets in Australia. And these kind of four-bedroom, 2-bathroom family homes were the best performing assets in those markets. That's not my opinion, that's the research. And so he owned 5 of these properties, and 5 years later, he sold them, and he actually bought a house on the Gold Coast, which is where he now lives to this day. Another gentleman, Michael, Michael wanted to start investing in America. He came on a buyer's trip in February 2013. He was just like you. He came on a webinar and he came and sat in a live room. He was quite skeptical. It sounds too good to be true and all of the above. And he came on a buyer's trip. He wanted to come over here in Atlanta, where I am right now. And he actually bought this house, funny enough, in Atlanta. And he was very clear to me. He said he knew exactly the amount of money he wants. And he said, I want to build passive income, globally diversified passive income. So my daughters, who were both teenagers at the time, have the freedom to study where they want, to live where they want, to work where they want. And, it's phenomenal. 10 years later, Michael and Lee and his 2 daughters are now living in England. They've achieved their objective and they're now studying and working in England. And he literally said to me, when I joined, it was the best money I ever spent and would never have happened if I tried to do it myself. So there's 3 different people, England, Australia, and America, that all have used the trend to be their friend to get results. And, again, I tend to say to people, if you get it right once, you might be lucky. If you get it right twice, well, who knows? But in this book, Property Going Global, I actually showed you how we get all the results, how we do the research. And you can see where we started investing in Australia, where we started investing in England. We actually stopped investing in England and we started again over here. And in America, we literally got it almost perfect at the bottom of the market. We started investing in America within 3 months of the bottom of the market. So if you want to know how to do that, read the book if you want to. So Property Going Global, I've just said to you, we'll give it to you for free, and or you can, become a wealth hacker. I've seen a couple of people that are wealth hackers, and you can do Wealth Going Global, which is the upgraded version. Again, if you look at performance over the years, you can see that the stock market, so this is over 25 years, according to the SEC, the stock market has got an average of about 8% return, and private equity has got an average of about 12% return. And yet the stock market has more risk than private equity. So all of you are probably investing in the stock market with lower returns and higher risk. Doesn't sound right, does it? How many of you are investing in private equity? Some of you are going to say, well, Scott, I don't even know what private equity is. On average, we've got a return of about 14% year on year for the last 10 years. And well done, Yoli. She's investing in private equity. So if you want to know more about this, we've basically got Wealth Going Global, which is the 10-year upgrade on Property Going Global. This is the course that Shane, my partner, built with me, which is a digital online course. And you can literally go through. So if you want to do this as a home study, you can literally go through, how do you choose your top 5 currencies? How do you choose your top 5 currencies? How do you find the top 15 assets? How do you, find the right partners and avoid 80% of the mistakes of others? And how do you actually build a wealth plan? And then the smart investing part, that's about how to use it all with technology. It's a bonus module. Now, I'm sure you can appreciate that what I'm sharing with you today, and not because I'm not trying, is there's only so much time, is literally the top of the iceberg. And if you want to go deeper, Wealth Going Global is there as an option. So you can just type in there Wealth Going Global or WGG, and the team can come back to you as to how you can get access to that if you're interested. We need some water here. It's getting hot with that hurricane coming through. I thought, God, I'm not used to hurricanes. My son's terrified that I'm going to die like the Wizard of Oz. Anyway, I don't know if that's a joke that I should be joking about. Anyway, so Clem Sunter is someone who I deeply appreciate. He actually wrote chapters 3 and 4 of the book Property Going Global, and he was part of Wealth Going Global. And he's one of the leading authorities in scenario planning around the world. And he was chairman of Anglo American. You can see it there, the Golden Uranium Division. He comes from, I can never remember whether it's Harvard or Cambridge. He was very much part of helping South Africa with the transition in '94 with Mandela, and Mandela actually consulted him personally. They spent 5 hours together working on how South Africa could become a great country. He's worked with the Chinese government. He's lectured at Harvard. He's a doctorate out of UCT. And he's probably one of the people that I believe most, from a scenario planning perspective, and getting clear. And I mean, his book here, Thinking the Future, is an amazing book to help you make better decisions as to where to invest around the world. And I'm quite excited. We haven't quite finalized the date yet, but we've organized a Q&A with Clem Sunter. So, I mean, anyone can go read his book. Anyone, we did a live webinar with him 2 weeks ago where he talk about the scenarios and the flags and the probabilities. But actually to have a Q&A to ask him is pretty unique. And so, yeah, I mean, if you're interested in this, watch your emails, because we'll be letting you know where you can come and learn from Clem. But why this is important is because it's back to trends. I haven't lost my train of thought. So the rule number one is trends. You've got to follow the trends. And Clem Sunter is one of the best in the world at helping us know the trends. And if you know what the trends are, then you can make far better decisions around investment. Does that make sense? Okay, number 2, risk. So I enjoy this one. And, it was back in, again, 2008, 2009. I think it was 2008. And the world was crashing. Barclays Bank was about to go bankrupt. And I remember phoning my uncle, who as we've already established, is a successful stockbroker and investor. And I said, Bill, where are you investing? And he said, Coca-Cola. And I said, why Coca-Cola? And he said, well, think about it, Scott. They diversified. They're in 100 different countries. They've got multiple products all over the world. And they pay very good dividends. And I was like, wow, that's really interesting. And then a couple of years later, I read a book called Snowball, which is the autobiography of Warren Buffett. And Warren Buffett owns 15% of Coca-Cola for the exact same reason. And I remember thinking to myself, wow, like that's phenomenal. So like wealthy people actually invest for income. And it all started to drop for me because my own personal story in 2002, you can see here, March 2002. So we just had September 11th. England was, in big trouble. England was going to war with Afghanistan. Oil prices were going up. Inflation was going up. Interest rates were expected to go up. And sound familiar to where we are today? Yes and no. I say with a smile on my face. And all my mates basically, can we put a link in there for school, please? Quite a few people are asking for it, Shane. For the Wealth University link. And anyway, long story short, I said, all my friends said, oh, you're crazy. You shouldn't buy a house based on everything I just said to you. And I said to my friend, well, what about if we put a conservatory on it and we can turn a 3-bedroom house into a 5-bedroom house and we can actually earn a positive, passive income. And anyway, so we did it. And that project has been cash flow positive for 20 years. And what I realized was that all my friends were chasing capital growth. They were all trying to buy fancy apartments on the hill that looked nice. And when the market turned in 2007, 2008, it was the capital growth that went down, not the income. In fact, the income went up. And this was the first time that I really realized that wealthy people invest for income. And middle class and professional people invest for capital growth. And the problem is that markets change. Markets go up and down, and capital growth goes away. But income doesn't. And so if you want to de-risk yourself, then you need to focus on income. And, in 2009, we started investing in medical buildings in America in 2014. But we asked them, what happened to the medical buildings in 2009, 2010? They said, well, think about it. The capital values might have gone up and down, but they didn't really care because people still needed doctors and the income kept working. I found that really interesting. Or more recently in COVID, and everyone was like, oh, you can't buy office buildings. Well, we've got an office building that we closed in December 2020 with a big partner called Feldman in Florida. They got about $1.3 billion under management, 1.3, 1.4, I can't remember exactly. And we bought this building and we're getting about an 8% cash on cash. I think it's 7.8 if I'm right. Let me just open it up. I'll literally show you. And what was really interesting is they said, yes, office is in trouble. And so they went and bought it at a great price. And what was fascinating is that they went after all the people moving down to Florida and all the sort of the lawyers and the accountants and the banks and everyone that needed to be able to own a building or to have space for their clients. And let's just see if the internet will hurry up here. But if I go down to this building here, I never in a million years thought that I would actually own a building like this. So here it is here. And I'm pretty proud to say I'm an owner of it. There we are. I got the cash on cash wrong, 9.82%. So right in the heart of the crash, you can see here we closed in December 2020, and we're getting a 9.82% return and a 17% total return. So that's just a classic example of, again, focusing on income versus capital growth. And another good example of income, this lady here started investing with us in 2014. Her name is Hilda, and she started buying into the medical buildings and commercial properties in America and started growing her income. And she was able to immigrate to America in 2019 before COVID, based on the income that she had, built up, the passive income. It allowed her to establish herself over 2 years, get set up in America. It just shows you how the wealthy people focus on income and not on capital growth. And by the way, capital growth, again, the mom and pop investors, the retail investors, they focus on buying a house and hoping it goes up in value, or buying Bitcoin and hoping it goes up in value. Whereas wealthy investors focus on the income and ideally the passive income and ideally even the diversified passive income. Is this starting to make sense? Yes? No? Are you bored? Is it time for me to go to bed? Okay, let's go to the third rule, and it's diversification. So, the single most important component to financial success, according to Ray Dalio, who in my opinion is the most respected person on the planet, is diversification. In his book Principles, he says you need to diversify across assets, within asset classes, across markets and currencies, and across time. And he goes on to share his secret formula that you need 15 uncorrelated bets, an attractive array of assets that don't move in tandem, will reduce the risk by 80%, and the risk-return ratio increases by a factor of 5. And it's at this point people are like, blah, 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 what? Now, just by the way, for 40 years, this man has got a blended return of 21% in US dollars. 21%. I mean, who here would like a return of 21% a year in US dollars on average for 40 years? Now, obviously, you have some years that are higher and lower, but on average, 21%. And this is how he does it. And when you look at this formula, it's not as complicated as it looks, because all he's saying is that you need 15 quality investments that are not tied together. That's all he's saying. 15 quality investments that are not tied together. If you do that, you'll reduce your risk by 80%, and you'll increase your risk-return ratio by a factor of 5. Remember, I promised you right at the beginning that I'd show you how to get there 5 times quicker, simpler, and safer. I've now shown you 2 ways. One is by being by a group of like-minded people, something like a mastermind. You'll get there 5 times quicker, simpler, and safer. And according to Ray Dalio, if you invest in 15 quality assets that are not tied together, you'll reduce your risk by 80%, and you'll increase your risk-return ratio by a factor of 5. Are the dots starting to join? It's not my opinion. It's not a sales pitch. It's literally facts and fundamentals. So let's watch a quick little TED talk that he did a year or two ago.
So what the individual investor needs to do is know how to diversify well. So the word that I would know how to diversify well and in a balanced way, to diversify it in asset classes, to diversify it in countries, to diversify it in currencies, to know how to diversify that well so that you have wealth diversification is important. Do not think that cash is a safe investment. Cash is almost always the worst investment. So you have to think about that. You should think a little bit unconventionally. Diversify well, be humble, don't market time, and be conscious of the dangers of cash.
So, I mean, literally, you can see here, it's a TED talk. You go see it. It's the 26-minute. He says, diversify well in a balanced way. The single most important thing is you need to know how to diversify in assets, countries, and currencies. Knowing how to diversify your wealth is the most important thing. Corolla, you said, yeah, don't you want your risk return ratio to be as low as possible? So, no, the way it works is you want low risk, high return. So you want your risk return ratio to increase by a factor of 5, which basically means you've got lower risk with higher return. Again, this is not my opinion. You can learn from someone that's managing $160 billion and has got an average of 21% a year for 40 years. So what I'm good at is teaching you what is already working. I'm not trying to reinvent the wheel. I'm literally copying what the top 1% are doing. And by the way, to invest with Ray Dalio, you need $100 million. Okay, $100 million. I don't have $100 million. But I'm sharing with you what, if you had $100 million, what he would do with your $100 million. A couple of mistakes I see in diversification. So the first one is, I live in South Africa. This happened to me. The guy was in Johannesburg. He was a doctor. He went to see his financial advisor. And his financial advisor said, no, but pay off your home first. And I said, well, what about Rand devaluation? And he said, what are you talking about? And I said, well, since 1975, the Rand has lost on average about 6% a year on year for 40 odd years. So you're paying off an asset, but it's in a depreciating asset by 6% a year on year for 40 years. And then people say, no, but don't worry, Scott, I'm going to go buy apartments. And again, I've done a lot of this. I've helped 2,500 people buy apartments. And most people in South Africa, almost without fail, if you buy from a developer, they're not cash flow positive. So you're actually putting money in every month. You're paying your mortgage, plus you're putting extra money in for the gap and the rates and taxes, and it's a depreciating asset. And they say to me, no, but don't worry, Scott, it's going to go up in capital value. And I go, well, really? I don't have time today, but I can prove it to you. I had a property in Cape Town. I bought it for 500. I sold it for $1 million. It sounded hell of a clever, except that I owned it for 10 years. I was spending 50,000 Rand a year extra money out of my pocket. If you do the maths, over 10 years, I literally got my money back, 500,000 Rand back, except now I had to pay capital gains tax on it. It makes no sense. When you look at the global wealth index, which again, I teach people in Wealth Going Global, and I talk about in my book, if you look at the buying power, so we got a basket of goods around the world that we've done sort of every year since 1983. And you can see the buying power of the Rand. Now, by the way, you can do this for any currency, the pound, the Singapore dollar, the US dollar. And you can see the buying power of your currency versus international currencies. But what's really quite scary is that the Rand has lost in buying power 92% since 1983. I'll give you another example. So this was a house that I owned in Teeson Island in South Africa, in Knysna. Now, it's one of the best estates in the country. And when you look at it on paper, we did really well. We bought it for 5.5 million Rand. We sold it for 14 million Rand. And we made a 161% return. On paper, that sounds hell of a good. But actually, if you go and do the maths, if you're a global citizen and you do the maths properly, you'll see that the amount of dollars that I put down back in 2013 was $177,000. If I had got a return like the average return that we're getting over a 10-year period, that would be about $461,000. But yet when I sold the house in Rands, I only got back $154,000 because the currency changed from 985 to 18. And so I was actually lost $22,000. So in rands, it looks like I made 161%, but in dollars, I lost money. And if you take the possibility, the opportunity cost of what I could have invested, it's like 3 times. Are we starting to take emotion off the table and see why diversification becomes so important? Number 2, risk. So I see this one all the time. Don't worry, Scott, I'm going to diversify. I'm going to go and buy a house in London, or even worse, in Manchester or Birmingham. I'm going to buy a little student accommodation. Well, you take all your money and you put it in one property. You've got one tenant, one management agent, one income stream. If it goes wrong, you've got all your proverbial eggs in one basket. And I see this happen time and time and time and time again. Mistake number 3. This is a friend of mine, and he went out and he invested in 8 hospitals, 8 medical buildings with one company. He was like, oh, I'm diversified. Well, not really. You've got all your eggs in one company, one team, one income stream, one asset class, one country, and one currency. And you can see here, he's got 8 hospitals in America, and none of them have been paying dividends. They all got hit hard by COVID. And that asset class, the medical asset class, got hit very hard by COVID. And now all 8 of his investments are not working. What about mistake number 4? And they say, oh, yeah, but I live in America. I don't need to diversify. Or I live in Australia. I don't need to diversify. And I'm like, really? Look at all the countries and the impact that they have in terms of what's happening. Or in Australia, sorry, not Australia, America, in 2008, 2009, property market lost anywhere from like 30 to 70%, depending on what city you're talking about. Dr. Dolph DeRuss had 8 commercial buildings in Christchurch in New Zealand, and there was the earthquake, and they all got condemned. The bank wouldn't pay, the bank, wanted their money back, the insurance wouldn't pay, and he went bankrupt. In England, when Brexit happened, the commercial property lost 20%. So there's no one market, there's no one asset class that's bulletproof or perfect, which is why diversification becomes so, so important. And that's why we call it Diversification 5.0. If I take the last 12 months, I've invested in 10 different asset classes across 4 continents, 5 currencies, 9 different asset classes, and 10 different partners. I mean, that is basically diversification. And what's important is that what I like to do and what we do with our partner at the family office and through the mastermind is actually help people build blended portfolios. So, this person had $100,000 and they wanted a blend of income and capital growth. So they're getting a total return of about 15%. And I actually showed them scenario planning, the difference between keeping their money in South Africa and investing it offshore in a diversified portfolio, and what that would mean to them over a 20 to 25-year period. So again, if you're looking to, and maybe, Shane, if you could just chuck up there the survey, if you're looking to have a one-to-one investor strategy session, this is exactly what we're talking about. It's literally sitting there and going, right, what do I do? How do I actually do this in terms of the process? So I'm gonna chuck the poll up for you guys quickly. They're up. Do you want to invest a strategy session? And because this stuff becomes really important. What I'm sharing with you on the screen is what we've done now for 20 plus years. And again, I always take forward planning, like scenario planning, and I say, well, I learned this from Dr. Hunt Australia years ago. If you can take the averages back over 5-10 years, and you can, or even 20 or 30 years, and you can extrapolate it forward, you've got a far better understanding of where the market will be in the future. And so if this is something that you'd be interested in, to like sit down, to have an investment strategy call, then, the poll is up there. Literally chat it in. Deanne, I can see you having one tomorrow. Fantastic. You can sit with one of our team and actually help you, to be able to do this. So I'll leave the poll up for a little bit and just to talk about this. Now, for me personally, one of the things I enjoy when I sit with someone, I've had lots of people over the years, a lady will say, well, I got my money in a pension. Now, I don't give people financial advice, but my partners at the family office do. They're fully capable. They can sit down, they can do your tax, they can do your structuring, They look at your entire portfolio. They look at your pension plan. They look at where you've got your different investments, and they basically look at how to optimize the portfolio. And what's really important is that for us is that you get different people. It's like, well, I've got this money sitting in a pension in South Africa. Should I take it out of the pension and invest overseas? Or, I own a whole bunch of properties in South Africa. Should I sell them? Should I remortgage them? And this for me is the value of this investor strategy meeting and call, because you sit down with someone and you actually say, right, like, where am I at? And what are my options to be able to move forward? And I mean, we can't help everyone. I want to be very clear. Like there's only certain people we can help. But what we do find is that even if we can't help you, we might say, hey, why don't you go join Wealth Hackers and get the knowledge? Or why don't you go to the Wealth University and start for free? Or why don't you just go on the Wealth Migrate platform and start investing from $10? But, for me, the investment strategy call is to sit down to get clear on what it is you're looking to achieve. Our most important thing, what are you trying to achieve? And once we understand what you're trying to achieve, we can make far better decisions as to whether or not we can help you, and in terms of what the best way forward is. So I can see 37 of you participated. Are you sleeping? Are you watching Netflix? Are you watching your WhatsApps? I'll give you another 30 seconds or so if you want to just participate. And if you're not interested in having an investment strategy call and everything's working for you, perfect. It's quite scary, but we're fast rolling into October, which means we're in the final quarter of the year. I always find at this time of the year, most people are like, I had a New Year's resolution, and that was to make sure that I got my finances in sorted this year. I got my diversification sorted. I got my offshore structures sorted. I've become a global citizen so that I have globally diversified passive income. All of these things that different people want. I want wealth protection. I want plan B. I want a peace of mind. And they kind of get to October and they're like, oh my word, what just happened? Where'd this year go? And suddenly I don't have a plan. And, for us, the investment strategy call is a way to sit down with one of our team and to help you walk away with that plan. Imagine going into Christmas having that plan. How'd that feel to you? Right. That's enough of the poll. If you didn't take your opportunity, toughies for you. So another person is a guy called Chad Pope. And Chad basically, Carola said, not yet option. That's fine, Carola. I've seen you on these a lot and you're learning, which is fantastic. So Chad started investing with us in Australia in 2011. Then he came to America and he started investing in American properties. He still lives in Johannesburg, South Africa, but he truly is a global citizen. He's got peace of mind. He's got diversification. He's got globally diversified passive income. And that's the benefit of doing this. But again, not a get rich quick scheme. It's a process that started in 2011 for him. So I want to share with you a little video here, and this is from our family office, and they're talking about the importance of portfolio construction.
This doesn't change, guys. Asset allocation, and this is not all of the asset classes we work with, but asset allocation is going to account for 85% of your return and is the fundamental building blocks of asset management and a financial plan that's going to produce income or anything. But Anthony's going to talk to this, and this will give you very specific kind of views around the returns, the averages, and where we think the value lies.
So just to be clear, 85% of your long-term return by the time you're 65 will come down to your portfolio construction. So when I say to people, do you have an investor strategy? I know Alex and I ask this all the time. Do you have an investor strategy? Do you literally, what is happening with your portfolio construction? I mean, who here would like to have a family office to be by their side, to be their partner in terms of this process? And again, if this is of interest to you, just type in the chat there, mastermind, and we can have a chat with you and see if you can qualify for the process in terms of that process. So yeah, just type in there, mastermind, if it's something of interest to you. I want to show you something really interesting that our family office shared with our mastermind clients. And if you take this is over a 20-year average. And you can see here, it's not 20 years. You've got 5 years, 10 years, 15 years, and 20 years. You've got the stock market and you've got private equity. The stock market and private equity, the stock market and private equity, the stock market and private equity. Over 5, 10, 15, and 20 years, private equity is outperforming the stock market. Then you go further and you look at this over a 25-year period, at the bottom here, you got risk, and on the left-hand side, you got return. So the people down the bottom here have the lowest return with the highest risk, and their portfolio is about 70% in stocks, 30% in bonds. Now, I'm willing to bet you that your financial planner has your portfolio that looks something similar to this. Over here on the left-hand side, you've got the highest return with the lowest risk, and all that it has is 20% of private equity. Now, again, do you want, us and our family office working with you to help you blend your portfolio so you move away from this being stuck in a box, which is what every financial planner pretty much does. And I'm not bad-mouthing financial planners. I'm showing you what happens on average, where you literally are low return, high risk. Or do you want to be up here with a blend of private equity, just at a minimum, and be able to get far higher returns with low risk? And it's not my opinion. This is based on 25 years of research. Can you start to see why the mastermind becomes so important? Again, investors that try to do it themselves, the average stock market return over, again, a 20-year period is 9.5%. The retail investor that tries to do it on their own gets an average of 3.6%. So again, you can try to be like me for 16 years and do it all on my own, but statistically, I don't even get the average of what the market's getting. Hopefully you're starting to realize this. And this is back to that return on investment I showed you, where, and again, I can show you these, or you can sit with my partner, Alex, and we can take you through it. But, this gentleman had his money with a financial planner. He was earning 17%. He had $12,000 to invest. I showed him if he got an average of 14, 15%. I mean, I've got the calculator, I can work it out. But over a 5-year period, the present value today was only $400 on over 1 year. Over 5 years, it was $12,000. Over 10 years, it was $57,000. And over 30 years, it was nearly $1 million. And I say to someone, would you invest $6,000 to get back $12,000 in today's money? Like if you literally went to a casino and you put down $6,000 and you got back $12,000, and I'm not saying it's a casino, but I'm just showing you the analogy. Would you do it? And literally everyone that's got 2 cents would say, yes, that makes sense. If I put down $1 and I'm going to get back $2 in today's money, that makes sense. Well, that's the difference between, getting the right information and the right partners and not. Does it make sense? So if you want to talk money and return on investment, then sorry, just 2 seconds. I need to message this gentleman. Okay, I need to rock and roll. So I have shown people this before, but you can literally go along to the platform. And when I talk about diversification, I'm just going to do it very quickly. You can go to London and you can literally go in and invest in this deal. And, you can start from $10. You can literally go diversify. You digitally sign your agreements. You go make investment and boom, I've just invested in England. Then I can say, okay, nope, I want a bit of America, industrial property. And I can literally go and I can go continue. I'm doing it very quickly. Today's not about trying to show you how to use the platform. I go agree, make investment, and I literally go view portfolio. And there you can see I've diversified into England and into America. If I went back to the marketplace and I said, I actually want a bit of Germany as well, I could invest in Germany. Same again, download the documents, agree them, digitally sign them, make investment. I go view portfolio. And in 60 seconds, you just seen me invest in England, in America, and in Germany. So, if anyone says to me they can't do it, well, the platform's been built to make it significantly easier. The fourth, major rule that you need to know is structure. And a lot of people get caught up with tax and structuring. They say, I need to go to the Seychelles or the Isle of Man or the BVI or some of these other funny little islands. I always say to people, be very careful. I know one gentleman that immigrated to Portugal. He had structures in the Seychelles. The Seychelles is blacklisted by European law. And because of that, they, you can't get access to his money. So it becomes really, really important, that when you deal with people, and again, particularly the traditional financial industry, they stick you in a box. They sell you a product to Mauritius, then you can only do investments that go into that Mauritian structure. And what's really important is that you get bespoke, personalized service. This guy, Manu, didn't know what he was doing to start off with. He went to partners. They defrauded him, more than $250,000. And so I always say to people when it comes to tax and structuring, sometimes it's not what you can afford, it's what you can afford not to do. Like how much would this cost you to do this properly? And one of the things that I love dealing with our family office is that they sit down with people, they say, right, what assets do you have? Where do you want to live? And they help you come up with a bespoke legal solution for tax and structuring. And I don't know many people out there that wouldn't want someone to hold their hand and to come up with a personalized solution with regards to tax and structuring in terms of where they actually are. So, a question for any of you. And no, Natasha, there's no fee to join the platform if you just want to invest directly on the platform. Who here is feeling overwhelmed? I warned you right up front that I would be like a hurricane. It's a lot of information. And I know, I talk quickly. There's a hell of a lot that I share. And I love this picture. It's so cute of a little girl like trying to drink from a fire hose. So I want to just share with you a couple of things to give you peace of mind. I shared with you Jordan right up front and all the things Jordan wanted, diversified global passive income, diversifying across countries, currencies, and assets, getting effective results with predictability, saving decades of frustration and millions of dollars to get the right knowledge, wealth protection, plan B, and peace of mind, be held accountable and have an accountability partner, have a family office to help manage financial affairs, create generational wealth for the family, have a fully completed, executed wealth plan and investor strategy sheet, and to get results. And a lot of you resonated with Jordan. And then I showed you Victoria, an entrepreneur in her 50s, aiming to build generational wealth, and the fact that she's got a very packed schedule, so she needed something streamlined. She wanted to understand the investment landscape to feel empowered to make the right decisions, and she wanted to focus on financial freedom. And I asked you 3 questions. I said, what would it mean to you in 12 months or less to be earning at least 5K in passive income without any hassle or complexity? I then asked you, how would you like a system which will statistically help you get there 5 times quicker, simpler, or safer? And finally, my last question is, could I make you an offer to show you how you could do this safely and simply in the next 12 months? So rather than trying to figure it all out yourself, would you like to work with me, my partner Alex, and our team, and our family office, and have someone actually hold your hand? Again, you can choose. You can do it all yourself. I've given you the information. Or you can actually have someone hold your hand and do it with you. Yes? No? Deanne says yes. Gwendoline says yes. Simon says yes. Henry says yes. If you don't say yes, you have to switch off now. It's compulsory. I have like a little Zoom function. That's just me having some fun. Awesome. Okay, so let me rock and roll for you. So I said living a life unlimited, and how do you do it? Diversification 5.0. This is the formula. You need to diversify across countries, currencies, assets, partners, and time. And some of you might or might not have seen this, but I love this as a little game. So I want to ask you an extremely direct question. And imagine you had a serious medical condition and you literally had to lose 10 to 15 kilos as quickly as possible. Now, I'll be honest with you, I hope this never happens, but it'll create a very important illustrative point for you. So again, I remind you, the doctor comes to you and says, you have to lose 10 to 15 kilos. Your life depends on it. Not, I'm going to try my best. Your life depends on it. It's a no matter what. And you got 2 options. Would you go home and get the home study course and supposedly do some workouts on your own? Or would you hire a coach? Would you have a coach come and knock on your door every morning and say, right, it's time for training? Tell me, home study or coach? Which one is it? Some are saying option 2, coach, hire a coach. I think we would all agree, if we looked at our intuition, we'd all agree that it would be the coach. And what's so important is that it's exactly the same, because we know that the coach will get us results. And I always say to people, what about if it was like this with your wealth? What about if it was the same with building globally diversified passive income? Surely you would want the same results with a coach. Now, for some investors, the super experienced, sophisticated, super confident, motivated beyond belief, we've got just what the doctor ordered. We've got the home study courses. You need the right information and the right partners. Well, we've got Wealth Going Global, which is the right information, and we've got Asset Mastery, which is the right partners. But for the rest of us, for those of us that need the help, we've proven for over 2 decades that you need a much more effective option. You need someone holding your hand. You need someone to guide, mentor, and help you navigate this journey. And I've worked with coaches from all over the world, and I've literally been in masterminds, and we believe that this is really important to help people build their wealth system and their portfolio. We also know that coaching one-to-one is really expensive. And so we wanted to look for lower cost options. To join a family office normally, you need $10 million. And I think Alex actually said to me there was one out of Switzerland recently where they wouldn't talk to you unless you had $250 million in terms of the process. So how have we done this? Well, it's simple. Just like everything else in technology, Uber's taken out the yellow taxi, Airbnb, the hotels. I'm staying in an Airbnb right now, or Netflix, Blockbuster. They've all done it, via technology, because technology cuts out the middleman, it cuts out the costs, and it dramatically increases the trust, the transparency, and the accessibility. So after 20 years of doing this and multiple coaching programs and masterminds, and basically having dealt with over 4,000 investors, we've put it all together because we knew that the investment space was broken, and we wanted to make it simple for people and to help fix it. So we've got the home study course. They're there. People can get access to them in terms of all of what they're looking for. But according to Harvard, you'll be 400% better off if you have a coach than doing it on your own. So again, not my opinion, Harvard. And then I love this little video because I could never understand why, when I was part of a mastermind, I was even more effective than when I was just getting coaching. And then I finally got the answer when I saw this video.
Now, this is extremely predictable. There's tons of research around it. Humans change 5 times faster in groups than they do with a one-on-one coach, consultant, or therapist in that case.
Wow.
So I started looking back at business models and people who had done this effectively over the generations. Masterminds aren't new, folks. They're not new at all. People have been doing this for thousands of years. And when you put a collection of people together who are all committed, all driven, and all so want to make the right changes happen, and you give them a leader to follow who's willing to get in the trenches with them, all of a sudden you start finding real, rapid life or business transformation.
So again, if you put the writing up, if you're in a group, you'll move 5 times faster than a one-on-one coach consultant. You got to have a collection of people who are all committed, all driven, and so want to make the right changes happen, and a leader to follow who's willing to get in the trenches. All of a sudden, you start finding real rapid life and business transformation. And I suppose there's 2 questions you have to ask yourself here. One is, again, I've proved to you how it can happen 5 times quicker, simpler, and safer. Not my opinion, fact. And what's important for us and why we have the one-to-one meetings is we got to make sure that people qualify, that they're the right type of person, that's going to add value to the mastermind, because you've got to have the right collection of people. You've got to make sure that people are, focused on building globally diversified globally diversified passive income and portfolio growth. And then you need to decide if people like Alex and myself and our family office team are the type of people that you're willing to, that are going to jump in the trenches with you and help you get results. Because the one thing about me, I'm only interested in results. So the question I have for you, if you're sitting here in your comfort zone, and you're sitting in a country, it might be South Africa, it might be England, it might be Europe, and you're saying, right, I want to kind of expand out of my comfort zone. Well, this is where the magic happens. And the one thing that I'm really good at is helping people leave their comfort zones and to play like global citizens, to think like global citizens, to earn like global citizens, and take people out of their comfort zones, but ultimately take them to the next level. And that's what the mastermind's all about. So if it's something of interest to you, just type in there mastermind, and the team can reach out to you. Who is this for? It's for people who are into personal development. So you must believe in personal development and be coachable. So again, we can't help everybody, and particularly people that know everything, we can't help them. It's for people who want passive income. So it's people who are committed to building a passive income of at least $6,000 in terms of the process. And then, it's for people that already have some sort of portfolio. They've bought a property, they've got some money in the stock market, etc. It's not for rank beginners. We've got other products and courses and stuff that we can help people that are beginners. But for us, it's important that those three things we're looking at, we call them the 3 Ps. And when Alex and I are interviewing people, the most important thing for us is understanding what it is you're trying to achieve, to ensure that we can help you. We want to help people that want to get there in the fastest, safest, and simplest way without hassle or complexity. So taking, again, what the wealthiest people have done, copying what they're doing, and helping people do it safely and simply without hassle and complexity. Who's it not for? It's not for complete beginners. It's not for time wasters. It's not for people with no capital, and it's not for difficult personalities. The fourth one, probably more than anything, Alex and I and the home, the family office work closely with you. So it's important for us that we just make sure that we're dealing with the right people. So that's the formula. We help people diversify across countries, currencies, assets, partners, and time. It's all about building globally diversified passive income and portfolio growth. And if that's the goal, the focus is globally diversified passive income portfolio growth, and that's the formula. How do we actually break it down? Well, we get clear on your goal. We break it down into monthly milestones, and then we've got the tasks. Now, I've shared this, and I'm concerned with the time because I've actually got a hard stop in a couple of minutes. But when we look at our family office, and they help about 65 families, you got to have a minimum investment of about $10 million to work directly with them. And we've plotted over 10 years and watched what they do. And there's 9 steps. Like I said to you, your financial planner is helping you with step 3. That's all they're helping you with, the step 3. But there's actually 9 steps to creating this generational wealth. And so for me, the Kickstarter phase is phase 1. It's all about establishing your vision. So we get very clear here on what is your long-term goal. I sit with you, or Alex sits with you one-to-one. We both certified international coaches to get very clear on your outcome. What are you trying to achieve? Literally, what are your top 3 outcomes? What are your top 3 priorities? What are your top 3 measures? And then we write everything down. And literally, we take you through this personalized process. And this lady here.
Scott, this is just a quick fan message. Just wanted to thank you again for our coaching call the other day. And then also wanted to thank you for the brilliant idea of that, sort of publicly putting in your goals in that Google Sheet. I see that the Google Sheet.
So, basically what you do here is simplicity is power. We help our members get clear on their top 3 outcomes, priorities, and measures without feeling overwhelmed. The next step is the investor profile. So we've partnered with the family office here. We've taken the Enneagram, we've overlaid it with the Enneagram of wealth. And there's 9 different profiles that you've got, depending on what you should invest and depending on what your profile is. There's 27 subtypes, and every single person has their subtype. And this becomes really important to know who you are, how you make decisions, and what you invest in terms of, both the good and the bad around the type of investment decisions you should make. This is materially important in terms of the process. And you can see the feedback that people have given us over the years in terms of, and by the way, you can't find this anywhere else in the world. We literally developed this ourselves. The Enneagram and Wealth will help our members gain clarity and insights into what motivates them, enabling more effective decision-making process in investments. Number 3 is the investment solution. This is where you get access on the platform to Calio Private Equity, discount on fees, and also the private banking service. So this is where we get you set up and actually help our investors simply and safely invest in high-quality opportunities all in one place without complexity. Then we move to the sophisticated. So you've now moved from the retail level to the sophisticated. They sit down in the family office and they literally look at your portfolio health check. They literally sit with you and they say, right, what's happening with your property portfolio? What's happening with your pension plan? What's happening with your tax and your structuring? So lists out all your assets and your liabilities. reviews your tax and structuring, reviews which assets are performing and where the overlaps are. And this helps our members gain complete insight and clarity into their entire portfolio without massive overwhelm and anxiety, and enables the team to optimize the portfolio. And again, so many testimonials from people of the significant benefits to them with regards to getting the asset classes all in one place. Then it's about optimizing. So now we know what your Enneagram profile is. We know what your individual circumstances are because we've got clear on your top goals. And now we build out the model and ultimately the portfolio construction. So, where are you? What's your age? What do you want to be? I mean, this is done in rands, but it can be done in dollars, euros, pounds, whatever. In terms of where you are and where you want to be, it's literally having your entire wealth plan put together in a unique, personalized, and bespoke way in terms of the process. So provide members with peace of mind, knowing they have a resilient investment portfolio. Remember, I asked you earlier if you want a resilient portfolio? Well, here's how to do it. Accountability, mindset, and execution. By the way, there's a bunch of people saying they're beginners. If you wait till the end, I'll share with you how you can solve your problem as well. Accountability, mindset, and execution. Well, you all want results over here, but it's everything below the iceberg: the emotions, the habits, the values, the thinking, the bias, the judgments, etc. And most people are caught in a waste state. They're withdrawn, they're fearful, inability to make good choices, demotivated. And it's all about being in a towards state: happy, ability to think clearly, creative, see new opportunities. And there's only two ways to be in a towards state. One is you get very clear on your outcomes. I've already shown you how to do that in step one. And two is you get in a like-minded group of people. Those are the only two ways. So every month we check in with people, and it's all about mindset, turning your outcomes into goals, achieving results on a monthly basis. We got time management, mental wealth, flow. And this is all about, you got clear on what your top goal is, but now it's about your monthly check-in. And every month we've got an accountability tracker. We've got accountability coaches to help people move. And they've got two ways of doing it. They can either do group accountability, which is where they do it in a group, or they can do individual accountability where they work with me one-to-one. And we actually have monthly individual accountability. And this is known as transformational coaching in terms of the process. And then lastly, the daily and habits. There's a whole bunch of tools and techniques we do to help people get results, including their time planning, et cetera, et cetera. So accountability, mindset, and execution will help our members with the tools and resources to achieve ongoing measurable performance. Finally, the generational. So now you've gone from retail to sophisticated. Now we go to generational. And this is where you've got to have a wealth, lifestyle, and legacy plan. And this is where we work with David Lipschitz. He, only works with billion-dollar families out of India and America until we met him. And he now works with our mastermind participants. And he literally takes you through these components that are here. So the essential components to building and sustaining generational wealth: strategies to align wealth with life goals and family values, insights into managing financial, social, and experimental capital, techniques for effective family communication and decision-making about wealth, practical advice for navigating family dynamics and intergenerational relationships, and steps to creating lasting legacy that benefits future generations. So again, you can go figure this all out yourself, or you can work with one of the best in the world. This will enable members to create a clearly defined step-by-step action plan for their wealth, lifestyle, and legacy. Number 8 is community partners and knowledge. And this is where we every month as a group, we're checking in. We've got a learning platform. We've got calendar events. We've got accountability. We've got community engagement. And we've got the interactive learning. And what's so nice is every month we sit down with our family office. This only takes 3 hours a month, just to be clear. So it might seem like a lot, but it's actually not. It's literally all condensed time. And every month, our family office gives us an update. What's happening in the world? What do we need to know from a financial perspective? How do we do our portfolio construction? I bring in a guest speaker every month around a financial asset, so that you're meeting partners, getting access to opportunities, and being able to invest and get results. So that's the process there. And this will help our members enhance their knowledge, invest with quality partners, and empower themselves to increase their confidence and make better investment decisions for themselves and their family. And then finally, investments and results. And this is all through quality investments and partners. We enable our members to achieve the results in globally diversified passive income and portfolio growth. And as Cynthia said, thank God for this mastermind, the partner it brings us, and the exponential learning curve you've gifted us. And I can show you some videos we'll send them out to you from a testimonial perspective. So can I ask you a question? Is this something that you would like? I've shared with you what people are doing. For those of you that are saying you're beginners, what I would suggest you consider is joining the Wealth Hackers. For $29 a month, you can literally get access to all of our home study courses, and you can do it through group training. But for those that kind of want to, do it in a mastermind, be around other like-minded people, then that's what the mastermind has been built for. And I mean, literally, this is what Derek, I was actually talking to Derek just today. He's a farmer, and this is what he was saying about, how wonderful it is to have your money working for you.
Scott, can you remember when you were a little kid and it was Christmas morning and you opened your Christmas presents? Huh? Can you remember that? That's what I feel like.
I have a little kid, so I get reminded quite regularly at the moment.
I tell you what, amazing. And I only just got a few dollars back in my investments again. It's the second payment I got in that I've seen on my wallet. And it's money that I didn't have to slog for. I had to think for it, but I didn't have to slog for. And it's absolutely fantastic. It's just when you start seeing your money work for you, it's just an absolutely indescribable feeling. And as a farmer now, I've got a very specific goal, which says that I need to build alternate income streams so that the weather doesn't matter. Because that's, being a crop farmer, the weather matters very much, and particularly this past year. When your income for a year is only 30% of what your expenses have been, you're in a difficult position. And to be energized and as excited as what I am in that position is incredibly empowering. Thanks, Scott.
So, I mean, there's Derek. This is Niels, and he was talking about how liberating it is to get the information.
Definitely, Scott. I mean, it is so stressful not to know where to go, to have financial partners and advice. I mean, just the connections that you gave us, bring us in contact with these people to understand it. It makes a world of a difference. It takes a lot of stress off your shoulders, weight. It's actually a very positive experience, especially in the world now with all these uncertainties. But from a human side, I mean, this was a phenomenal experience. And it happened so fast for us. But we were ready for it. I feel that we have proper partners in you and in the mastermind and with Calio. It's a very positive experience.
So that just gives you an example of the type of people. And if you want their type of experiences, I've already shown you that if you just sit here and kind of do it all yourself, within 3 months, you won't even be able to remember 10%. But if you want to do it with me, you'll get right up to 95%. I can see Shane's put the link in there for Wealth Hackers. So for those of you saying you're a beginner, well, then go join Wealth Hackers. We've literally helped people at different levels. We've got the Wealth Hackers for people that are beginners and want to get going. And then we've got the mastermind for people that, want to literally work with me one-to-one, work with Alex one-to-one, work with our family office one-to-one. And as per Harvard, you're going to be 95% more effective in terms of that process. So it's quite scary. This year is very nearly over. If you take Wealth Going Global, literally it'll help you choose the right countries, currencies, assets, partners, and time. Asset Mastery will give you access to the top 15, different best assets around the world and their partners. And again, Shane's already put in the link for Wealth Hackers. So if you join Wealth Hackers, you get access to Wealth Going Global and to Asset Class Mastery, which will teach you about the right information and the right partners. But when it came to the mastermind, we had two choices. The average mastermind around the world for the type of value we had is about $50,000. We chose not to charge $50,000 because we wanted people that could join and actually have capital to be able to invest in deals. In England, the average price is at least £25,000. But again, we chose not to do £25,000 for the same reason. We wanted people to have, the ability to invest in deals, and even $10,000. Everyone's been telling us it should be at least $10,000. And we've chosen certainly to make it affordable for people to be able to get into the mastermind. But I do want to say, I'm not going to charge you $10,000. But if I did charge you $10,000 and it helped you achieve your freedom goal, would it be worth it? I mean, just type in the chat box for me. Would it be worth it? Would you pay $10,000 now for you to be able to achieve your freedom goal? Would it be worth it? Yes or no? Deanne said yes. Henry said yes. Just the two of them. Okay. No one else wants to get their freedom goal. Jay said yes. Madeira said yes. What about, if it provided you with the peace of mind to know your family and your future was secure? Would it be worth 10,000 then? Because money becomes really, really important if you start to actually get clear on what is important. And what about if it provided you with a plan B and protected your wealth that you've already created? Would it be worth $10,000 to you then? And what about if it saved you a decade of time? I mean, I meet people all the time. They're like, Scott, I saw you 10 years ago. I wish I'd done something with you. If it could save you 10,000, or 10 years, would it be worth $10,000? I've shown you that over 10 years, it's closer to $57,000 that it'll actually cost you if you investing with the wrong information and the wrong partners. And then finally, what about if it could provide you with globally diversified passive income and peace of mind? Would it be worth $10,000 to you? Are you starting to see how important this actually is? As Michael said, he came on this journey, he started with us in 2013, and he literally said, when I joined, it was the best money I ever spent, and it would never have happened if I tried to do it myself. I mean, I've told you a story already, but what was also very important was that Michael negotiated really hard with me right up front, and he said, make this as affordable as possible, and we ended up becoming good friends, and he ended up doing a lot of investments. And so one of the things with the mastermind is we want to make it as affordable as possible for people, but we still want to find the balance between the people that are serious, like people that are really committed to getting their results. And so for us, it's a balance between, when people pay attention. And, it's really important that we work with committed people that want to get results. And the one challenge we got is that we've got a limited amount. This is a bespoke offering. It's not a scalable offering. We can only ever help 5 people at one time. So on average, Alex and I will meet somewhere between 15 to 20 people that are applying to be part of the mastermind. And unfortunately, we've only got 5 spots that are available. And the reason being is that, you work one-to-one with me and Alex, you work one-to-one with our family office. There's no way to scale it because it's a personalized service. And it's also very important for us that we're getting the right type of people to join the mastermind. So if it is something of interest to you, then literally go along to diversificationmastermind.com. It's a 30-minute call, and we literally sit down with you. We understand what you're wanting to achieve. We want to make sure that we understand the risks and what it is you're trying to achieve. We can explain, what we do and make sure that there's a fit. We want to also make sure if you qualify in terms of the process, and we happily take you through the process. Because it's very much a win-win situation. Like, we want to help you get results. If we don't think you can get results, or if we don't think we can help you get results, then we won't ask you to join the mastermind. And on the assumption that you qualify, then you get to join the mastermind and come on this journey with us. We only want to work with committed investors, and we do ask people to respect each other's time. So if you do book a call, please turn up on time. Your time is valuable. Our time is valuable. It's really important that we meet with people who respect each other's time. And as I said to you, unfortunately, there's only 5 spaces that are actually available. And so, in conclusion, you don't have to take my word for it. You can literally go to the link, diversificationmastermind.com. You can go and see all the testimonials, the videos, the trust pilots. There's 74 people now that have been through the mastermind. There's plenty of videos and testimonials if you want to watch what other people have to say. You'll get access. The bonus is you'll get access to myself and the team. You'll get access to our tax and currency partners. You'll get access to all of our asset mastery and all the different assets, be it structured notes. I mean, this is one of the best performing assets over the last 10 years. Multifamily, one of the best performing property, real estate assets in America, medical office, industrial logistics, co-living. We've got the tax report, we've got London, London residential, we've got gold and silver. You'll get Wealth Going Global for free. You'll get the Clem Santa, presentation for free. You'll get access to Wealth Hackers for free, which, you get all of the home study course included. You'll get access to the best immigration agents. You'll get first access to join us on the Wealth Weekends. They're only available to Mastermind members. And even the buyers trips, I'm considering starting the buyers trips again, and you can come on buyers trips with me. I'm currently in America buying property. So if that's something that interests you, just literally go to diversificationmastermind.com. If for some reason you can't make it work, just type in there, mastermind, and our team will come back to you in terms of setting up a call. To remind you that this is an application call. The whole idea is to see what you want to achieve, to identify the risks, and to explain the process, to see if you qualify. And by the way, that's a double-edged thing. You're making sure that we're the right fit for you. We're making sure you're the right fit for the mastermind. And on the assumption that you're the right fit, it's about making magic and making synergy in terms of that process. Please be on time. And unfortunately, there's only 5 spots. We normally get about 15 to 20 applications, and unfortunately, we only have 5 spots in terms of the process. So I want to, finish with something that's important, and this is an interesting one, but we actually guarantee results. So when someone joins the mastermind, having done this for a long time now, I've done this for over 20 years, we guarantee results. So when someone commits to be part of the mastermind, we give them a guarantee that we will work with them for free. Once they've committed and invested part of the mastermind, we'll work with them for free until they've got the minimum agreed result. So that's as long as they do what they say they'll do. So we're putting our money and our time where our mouth is to get your results. And there's not many people out there that are prepared to work on that basis. So if from our perspective, you can see that we're results driven. If you want results, if you want an accountability partner, if you want someone to stand alongside you and to go on this journey with you, then that's what we've built. And that's why this link here at Diversification Mastermind is so important. I've shown you the return on investment. If you take it over a 5-year period, and if you were to invest $5,000-$6,000 upfront in yourself, and you're getting a $12,000 over 5 years in today's money, $57,000 over 10 years, and nearly $1 million over 30 years. It's a kind of a no-brainer when you actually start to look at it from ROI. I'm not telling you what to do. I'm not giving you financial advice. I'm purely pointing out to you the difference between investing in average, mediocre deals and getting access to the right information and the right partners, which is what our mastermind is all about. And again, if it's interesting to you, just go to this link, Diversification Mastermind. In the old days, this was us. This was us in New York in February 2013. It was freezing cold. We were out buying houses. This was us in Times Square. This was us with Dr. Dolph DeRuss in Phoenix, buying houses on the auction steps, having a bit of fun in the Grand Canyon, flying into the Grand Canyon, watching a show in Vegas, buying houses in Atlanta, buying more houses in Atlanta, buying multifamily in Orlando. This guy was 22 at the time. He's now in his early 30s. He's facilitated over $1 billion worth of real estate. It started by coming on a buyer's trip with us. Opening bank accounts at Wells Fargo, learning from the partners on the ground, learning from the partners on the ground, having some fun on Beale Street, going to the New York Stock Exchange, going up to North Dakota where we did fracking, etc., and even having some fun with Oktoberfest. And what's really interesting is that these are some of the wealthiest shopping center owners in Africa. They own the single biggest privately owned portfolio of shopping centers. And they know that the only way to do it was through partnership. So they came on a buyer's trip and, partnership in terms of the process. Why we believe you should work with us? Well, there's many, many reasons people say they don't, but mainly it comes down to I don't have the time, don't have the money, or don't have the knowledge. We always say to you, if you want to join the mastermind, it's been built for people that actually have very limited time. People that are successful, people that run their own businesses. It takes 3 hours a month. If you've got 3 hours a month, then we will help you get the results you want. And if you don't have 3 hours a month, well, our feeling is you'll never, ever succeed in the space of wealth, because 3 hours a month is nothing in terms of actually setting yourself up for success. I don't have access, I don't have the knowledge. Well, that's exactly what this is all about, giving you access to the right information, the right partners, so that you can do it. And the money, well, we really have kept it as affordable as possible to enable people to get access to the best information, the best partners, to get access to work with us one-to-one, and to get access to work with our family office in terms of that process. And the last reason we think you should work with us is we're the only one, to our knowledge, that does global diversification. And so I've always put my money where my mouth is. Whenever I've wanted to learn something, I've joined a mastermind. I spent $14,000 at Singularity University. I spent $25,000 a year for 10 years at the Entrepreneur Crystal Circle. I spent $40,000 a year for 2 years in a row to spend time with Richard Branson on Necker Island. And I spent $50,000 a year to be part of Tony Robbins' Business Mastery. I know the difference between putting myself in a like-minded group where I'm wanting to achieve a result. And then finally, there's one pillar left, and that's your team. Most of you are here and you're looking to meet with a financial advisor, financial institution, and do an offshore investment. There's multiple fees and you're getting very low returns. Or you try to go do it yourself, and there's 16 different middlemen between you and your investment. And the problem with that is, again, that there's lack of trust, lack of transparency, and low returns, no alignment. If you want to go and do it yourself, these are all the steps that you need to look at: tax, due diligence, structuring, compliance, banks, investor KYC, SPVs, etc., etc. Or you can do it with us, 4 simple steps, and we'll help you through the process. And, when you look at the due diligence, again, we've spent millions and millions on finding the right partners, the right team members. So again, you can copy our process. We'll teach you how to do it all, or you can partner with us in terms of that process. And again, in terms of finding the right deals, you can go out there around the world, even if you've got $100 million, to get access to the right partners and the right information is extremely difficult. I mean, this was an amazing deal we did last year, an industrial deal, 7% cash on cash, 17% IRR. If you put $100,000 in, it'll aim to double it over 5 years, which is a 2x multiple. And it's just an example of the type of opportunities. We did a deal at Christmas in Manhattan that the mastermind members and I participated in. It just gives you an example. So finally, the family office. Traditionally, you needed $250 million to work with a family office. Our agreement with our family office is that they literally will work with anyone that qualifies for our mastermind. And this is Abdul. Abdul is the auditor of the Auditor General, and this is what he had to say about the process.
And I'm a living example of that. In my little life journey from opening up my own auditing practice, the firm today audits the Auditor General of South Africa in terms of doing, pre-issuance reviews, etc.
So Abdul, let me ask a question to you in terms of it. So you've been very, very successful in property in your country, but you went and decided to sign up.
Scott, like I said to you at the beginning, I have this wealth. It's all localized. I have no exposure anywhere else on earth. Okay, so the catchy phrase from your side was going global, or diversified income going global. Now that appealed to me. In other words, yes, I may be rich in this country. What happens if I'm outside? There's all types of restrictions in terms of the transfer of my wealth, my assets, wherever I may be on earth. So that appealed to me, and that really opened an opportunity or a process for me in terms of engaging in diversifying my wealth. And I must say, although I have the brains to think that out, why must I do that? Yeah, you're giving it to us on a platter. So we follow that process, and yes, we engage. And yes, we will get exposed. We have obviously since did do an investment again in property. Property is the economics, I understand. One of the things you alerted us or reminded myself is that if you do things in teams, it becomes easier. Collective wisdom is better than your own limited and parochial type of ideas. So that's also something I quite enjoyed. But if you don't have that, maybe we'll never get to success.
Yeah.
Surely it won't happen next week, but as long as it happens, I think you're on the right road. And that's the path I've chosen to take. And thanks to you, Scott. And it's never too late. The only time when you're late is when you're late. You're dead.
Yeah.
Up until then, you have a purpose on this earth, perform it.
So Abdul's one of the coolest guys that's part of our mastermind. You know, Alan, highly successful developer, and he also knew he couldn't do it all himself, so he did it all through partnership. And 4,000 other people have been on this journey of ours: wealth protection, Plan B, peace of mind, diversification, freedom, global citizen, empowering your children, immigration, and living a life unlimited. If it's something of interest to you, go to diversificationmastermind.com. That's the formula. We help you build globally diversified passive income and portfolio growth. We help you diversify across countries, currencies, assets, partners, and time. The mastermind is what was built 2 years ago, where people said to me, Scott, I want to work with you. I want to work personally with you. I want to, do this in a like-minded group. We said, cool, let's build a mastermind. And we've got 74 people that are part of it. And that's the process. There's literally 9 steps that you go through in terms of that process. Shane, can I ask for a huge favor? I need to dash. I'm in Atlanta and I'm doing 2 things at once here. And I need to jump to go and meet the lawyers now at 3:30 my time. I know that I've taken a huge amount of time. I hope I've shared a lot of value with people. But what I would appreciate is if you've got the slides, Shane, and you could open up this slide here with the 9 steps. And if you and Alex could just manage any Q&A for people, if they've got any questions, I would really, really appreciate it. And if people enjoyed this, come along to our workshop, share it with your friends. We're very, very passionate about helping people. We really want to share with people what the opportunities are, teach you what the 1% are doing. And really, you get to choose. Are you a retail investor that wants to go to sophisticated? Well, we built the mastermind for you. Are you a high net worth that wants to go to global diversification? Well, we built the mastermind for you. Are you someone that wants to focus on generational wealth for your family? Well, we built the mastermind for you. So if any 3 of those resonate with you, I would click on diversificationmastermind.com and I would basically, apply to be part of it. As I said, it's not for everyone, but we can certainly assist. Alex, Shane, are you guys there? I need your support. I need to bounce.
Yes, I'm here, Scott.
Okay. So you're a co-host. If you want to get the screen up, if anyone's got any questions, please fire it through to Shane. I need to bounce. I'm in the middle of a hurricane and it's going to take me half an hour to get to this. And so, Shane, Alex, over to you. I'm going to go live in the moment. I'm going to meet lawyers, which is like the worst thing I hate doing. But anyway, I need to go and sort out an escrow account with a lawyer. And I thought that 2 hours would be plenty of time, but apparently not. I talk too much and I try to share too much. Alex, Shane, everyone else, I'm out here. Cheers.